Hi, this is John from optionstradingpilot.com. Guillermo and I are, which is my business partner, we are recording this at two different times, and they'll be stitched together. So here we are on the first day of May. What a wild week, a very wild year so far. Fortunately, we've been in cash most of that time, or short the market and long commodities, and we just got back into the long bond trades from about a week ago. Again, we're options trading pilot. What we do is we trade mechanically and look at different investment strategies, mostly in stock options, commodities, futures options, and cryptocurrencies. And we trade all day long, every day. The markets are open, and we post those trades out to our viewership in real time. So come and visit us at optionstradingpilot.com. Try us out, see what you think. If you like, subscribe to our service and go from there. Now, for a recap, through the end of the week, last week, the Nasdaq is down about 12%, on pace for its worst performance since October 2008. That was through the financial crisis. The S&P is down more than 7%, and that's down past the lows of March 2020 with COVID. And the Dow's off nearly 4%. For the month, the Nasdaq composite is roughly 24% from its intraday high. The S&P is off 14, and the Dow is off 11% during that time. So looking at the week ahead, I think there's going to be some challenges again. I will go out on a limb, and most likely I will be fading any rallies, selling rallies. On the S&P, our number that we really need to, right now we're at 41.31, just about unchanged for the evening. There really is not much support until you get about 3,300. So that is quite a drop from here. So see if I can get this a longer term mode. Okay, so this does provide us a little bit more granularity. So anyway, if we're looking at this, getting a little more, okay, so as you can see here, this is back in early 2020 where the market dropped. We've had a steady climb up to this point. And really at the beginning of this year, which is all this area, it's been very weak. We're under the 10-day, the 30-day, the 50-day, the 200-day moving averages. The MACD is declining at a rapid pace. Frankly, I think we're in a lot of trouble, at least in the short term. I don't want to be too pessimistic, but we really don't have 3,300 is about right here. And that looks like where we have a support. We're at 4,100. This is our support about right here at 3,300. So we'll see how the downtrend continues. The problem for the bulls is there really is no support until we get here. There could be an intermediate support right where we are, and maybe we'll bounce a little bit off that. Guillermo will go into that more. But we have a lot of room on the downside here. So we need to look at this where we are right now. If it breaks lower here, watch out. So I don't see really the Fed stepping in. They haven't really said too much. I'm not sure what's going to happen. 41, this level right where we are is a key level to hold. So we are in a dangerous area, a seemingly weak area. We still are looking at long commodities in cash, short the markets. I think at this point, it's very hard for me, at least, to go short on individual stocks that have been beaten down so much, because we've seen so many stocks that Netflix, Peloton, Amazon, DraftKings, that get their legs kicked out from under them, and you think that's a really bargain hunting and a great place to be, and they continue to go down. So very hard to get long some of these beat up stocks. But at the same time, also somewhat hard to get short these stocks too. So right now, I'm really playing the indexes to the downside. If we look at VIX, we're in a little bit of a strange pickle with the VIX. If we look over, well, let's look over the last 3 years, because that brings in 2020. You can see during COVID that VIX got up to 80, but we rarely get over about 35 on VIX, and VIX is the volatility index futures. Right now we're at 3160. We are upticking here, and we have been for some time. So this is a time when statistically, the more trades you put on that are strangles or high volatility, high implied volatility, and high, you just got to pick your deltas right. And you can really get your legs kicked out from under you if you're wrong. So we're reaching a point where we're on the extreme on the VIX. That doesn't mean that it can go, it cannot go up higher. Of course it can, but we're in a rare area for that. But if you look, bonds are weak again. Friday was a very weird day, especially the last 30 minutes of the day. It looked like there was a mass selling, a mass liquidation of everything. Bonds, gold, stocks, commodities, crypto, everything was being sold. And it was almost like a little bit of a panic on Friday. So right now we're seeing things pretty much flat for the day. We do have Bitcoins down here. These are the cryptocurrency futures. 420 is the cannabis. That's also, well, that's not open yet, so that's a moot point. But we're looking at what's interesting is some of these interest rate products. Looks like they're up, and bonds are down slightly again on the open. Let's actually look at the bond market. So I've been pretty happy where the bond market was, but it's interesting that it's dropping off again. So going to be an interesting week. There's a number of earnings still coming out, but I think most of the big players are done. Just looking through the list, we have Pfizer, Airbnb, AMD is probably the big one, Starbucks, Block or Square, SQ, and then looking at DraftKings later on in the week on Friday. So pretty interesting. I think most of the big earnings are done. Like I said, I probably would be fading any rallies to get a little shorter, but really shorting the indexes in spreads. I don't think I'll be doing many uncovered or naked positions due to the volatility, even though the odds are in your favor. But when VIX gets over 30, those the probability of larger losses start to creep in. So might be an interesting week. We'll just have to wait and see. I'll probably play it pretty close to the vest. The Fed speaks later this week. That's like the flop. So we'll see what the flop has in store, and we'll go from there. And we'll hear from Guillermo now. He'll look at some things from a technical basis. He might or might not agree with me, and that's okay. We trade differently sometimes, but most of the time we are similar. but our mechanics are very, very close. So that's it for me. Looking like a really interesting week. Hopefully we can make a little money and stay in the game.
Hello and welcome. This is Proforma 24, or you can call me Guillermo. I'm here for you. I'm just dropping stuff over here. Had a little accident today. You guys can see. Don't climb old ropes. I tried it and it broke on me, so nothing major happened, but it was pretty awesome. Anyway, everything's well. Just want to go over the markets. So my intent today is to give you a broader picture. Everybody's saying we're going down. You know, we're looking at the bond market, and the bond market is also going down. I'm going to tell you the gameplay, but I just want to show you bonds are going down. It looks like the next point they want to hit is that 138.12 or 10. Oil is down, which has been the thing that gives us the headwinds. I say down, but it's actually in a trading range, and it might actually be coiling to pop up. So that's actually pretty interesting, right? So keep those two in mind. And let's look at the NQ, my favorite, the NQ. I mean, it has gotten beaten up, right? We're on this daily. We're right at that support end. There's not much. Let's look at the weekly here. I mean, things are ugly. That selling pressure there at the end, that was very strong. Again, on the weekly, we're right at the fib line, right at the support. Let's look at how we're looking on our volume profile to see if we have buyers, we have any hope. It looks like we do, right? It looks like we can hopefully bounce from here, or like John was saying, the next stop should be here, 11.7. That could get ugly, right? Let's look at it in terms of what everybody is used to seeing, which is the triple Qs. Triple Qs on the weekly. Clearly, there's a fall off, a big drop off, and the next hope to hold would be at the fib line, 286, 313 to 286. Now, do I think that's going to happen? Gosh, everybody's telling me so, but I'm going to tell you, there's something that I do know about the markets. They won't do what you think they're going to do most of the time. I don't know how they know, but they know. This 4.5% drop off on Friday, that was nasty. I'm going to say that it was real nasty. But one thing to remember is that the obvious stuff usually does not happen. And what does that mean? What am I saying? What I'm saying is that there is hope for a strong bounce. And I'm going to paint the picture. There's two pictures I'm going to paint. The first one you got to think about, it's the end of the month. It's like the worst April since 2008. I read about it. I looked at it. It's the worst April we've had. Do you think that if you're managing millions of dollars and you're going to send out a letter to your investors, you want to show that you're holding Roblox, that you're holding PayPal, that you're holding all these companies that have dropped severely? The answer is no. You don't want to show that. And so you're hoping as a manager that you can not show those in your report, and that you can buy them in May and have them go. So one thing that you should know is that historically the summer months tend to be pretty tame. And what I mean by that is there's like a drop off in trading volume, usually not as early as April, but April tends to be a positive month. And then May, June, July, they're nice months. Why? Because it's usually a retail traders. The volume isn't as heavy. I'm not saying it never is. I'm just saying that that's the general idea. So people go on vacation, people are, you know, trying to take time off and simmer down to get ready for that fall, which is a strong trading month. We usually see September, October be the danger months. That's when I anticipated this drop that we've seen here, but that's okay. The way we trade is we take risk off. We're gonna be exposed to a certain amount of risk, and then after that we're out. So going back, so that's story number one, right? Story number one is you got to be counter, right? You see the sentiment all negative. You just click on, are we in a bear market? And technically it looks like we are, right? We've had a severe drop. But when everybody thinks, oh my God, next week's going to be crazy, I think we're going to see volatility. Powell speaks again next week. And I have to tell you, it really bothers me that our markets move because one guy's speaking about the interest rates. There's something wrong with that, obviously, right? Because there's got to be price discovery. But anyway, not getting down into the philosophical sense, let's get down to brass tacks here, which is what are we going to do this week? What's the plan this week, Guillermo? John went over some really good information. And like he said, we trade similarly, but sometimes he's in a long position, I'm in a short position, and vice versa. And that's okay because we're playing different time parameters lately because the volatility has been so crazy. I'm scalping. I'm not doing a lot of verticals. The verticals are a little tough for me right now just because it eats my buying power, and you're going to have to see a big negative before it turns positive a lot of time. Or you have a big positive, and what I mean by that in verticals is you see a nice pop to 30% of your premium, and then guess what? It's gone, and then you're down 20, 30%. You know, what's up with that? So I'm not into that. So looking at the charts, we look at the triple Q, you see I turn to daily. There's nothing but down, right? And I show you the 286. Let's look at the SPY. Last time we were close to this point, we had a ridiculous turnaround. That was on February 23rd. And for no reason, it turned around. Notice, in between fib lines, not a heavy volume area. We're going to look at the weekly time point just to make sure. It was like right this week, it looks like. It was like this week. It just rejected the weekly time zone. We are below that according to the weekly. Let's go back to the daily. You can see what occurred here, right? That's 24, 25, 26, 27, 31, 32. Yeah. So you can see there's a super big recovery. It looks like, you know, you can see my trend lines here. These are auto created. I don't really follow those. I really like creating my own, but it's just not nice having a visual. But we are really close to this low over here on the 24th. The weekly is not as obvious. It looks like the weekly is telling us that we're right on it, right? Unfortunately, this is stronger, and this rejected here pretty harshly. So yeah, they're right. Everything we're seeing is down. Our side down, volume is high with big negative. Everything is telling us that way. I just have developed a healthy sense of skepticism when everybody thinks the same way. And look, and if I'm wrong, we just change it. Okay? If I'm wrong, then what we're going to do is we're going to cut bait and go the other way. And so one thing that I've learned, it's specifically in this market, if you're holding a call and it turns down, then close that and buy a put. You know, it's like, it's actually been as easy as that. It's really funny. The second you realize you're wrong, buy the opposite. Now, could it switch back on you and you're in trouble? Sure, absolutely. I had a put going, I think it was Friday. Yeah, I think it was Friday. I had a put going. It breached my high level, or it reached my high level, and I forget what that number was, but I had the NQ high level. I set those numbers the day before, and so then I start looking at the price action. Tells me, okay, we're about to head down, and then guess what happens? It goes to the T1, which is a target one after my high level point. And I'm like, okay, well, I was wrong. I took it off. It looks like it's going to continue up. I actually did not buy a call at that point. I was very, you know, it's Friday, the end of the month. I had the plan. So at that point, what I ended up doing is I waited, and guess what? The price action told me it was going down again. I reopened the position. I had a really nice day Friday. In fact, unfortunately, I had a lunch meeting to go to, and maybe I can show that to you. Yeah, here we go. Here we go. So, wow, where are we? I don't even know. I don't even know what day this is. Anyway, I went to lunch, and what ended up happening is that it acted like it was going to hit the range line and move back up slightly. So I closed my positions. Then after that, unfortunately, I was still at lunch and it broke that line. It was a good time to get back in. But as you can see, this is my general day trading system here. And I'll put in the NQ and the CL and the MES. This is minute bars. I just was showing 5-minute bars there right now. There's been some correlation in 5-minute bars versus 4-minute bars and NQ. As I've been using that. You can see the downturn in CL. And so if oil is down, my general idea would be, hey, we're going to have equities go up. So that's how it's been going. So what are we talking about here? It's going to be very volatile, right? Especially before Powell speaks. After Powell speaks, what's he going to say? Is he going to say, hey, we're going to do 75 beeps this week? I don't think he's going to say that. I think at the worst, he'll say we're going 50 beeps. And that's what everything has priced into it. It's like the week before, he was very harsh. He was very harsh with, hawkish, right? About what's going on, what we're going to do with interest rates. And that's when the markets really, really started to go down. I found it interesting because we'd already been talking about raising interest rates. The only issue that they had was like, we're going to speed them up, but things didn't really change. And so then when he speaks this week, it might stay 50 beeps. And then what? There's no news. So what could happen is we only do 25 beeps. What do you think the market's going to do? I mean, the retail investor, I know for sure, is going to go haywire and is going to bump everything up. So I'm just saying, be cautious with being too negative, right? It's like, I'm still scalping. You know me, I follow that 513 SPY, with some of the bigger accounts that I look at. I just take risk off with that. I've gone negative on some of that. We've made good money on negatives. The scalping has been amazing. The moves have been amazing. As a trader, you can only dream of the moves that we're seeing here. For the investor, this is super tough. I'm also an investor. That's been difficult. But I love the trading. The trading has been nice. So let's close out with talking about the second point. What's the second point, Guillermo? I'll tell you the playbook. I'll show you the playbook. The playbook is this. If you're the Fed, what you're looking for as you raise interest rates is, and so you guys know, they can't manage the 30-year bond. That's the market thing. All they can manage is the short term. But what they're hoping is, I don't know if you know, but the yield curve goes from 3 months to 30 years, right? So that what they want to see is an upward curve on that, like a curve that goes up. The short term is going to be lower interest rate than the longer term. They talk about curve inversion, right? That means the short-term interest rate is higher than the long-term interest rate. And that signals what? Yeah, you said it. It signals a recession. And we've seen that a couple of times, and that tends to be true. But I don't want you to get confused with the idea that because the economy is in a recession, that the market is going to go down. Yeah, sure. Yes, it happens. It happens a lot, but not necessarily so. Markets are forward-looking. Markets are looking what's coming into the future. And so what we're seeing now is like, hey, we've already seen that that's happened. What's going to happen next? So I don't know. We have too much money, too much currency in the economy right now. And people are just worried that things are going to fall. I just think we have a lot of currency floating around for it to do nothing. So that's one for the bulls. The other part that you don't know, that maybe you're not fully aware of, is the playbook of the Fed is, if we can raise interest rates while keeping bond prices not collapsing, that's a huge win. So how do you do that? Well, you saw it last week. Last week, what we heard Powell say was to scare the bejesus for the equities market. So if you create some fear, not panic, but create some fear to move demand from equities to bonds, then the interest rate that would drop the prices on bonds would be offset by the demand. And so the prices could hold. Follow what I'm saying? If we can create demand as the Fed for bonds, and they haven't been able to do that, okay? People are hungry for those equity returns. People want the equity returns. They can't wait for equities to go up. All we need is a small little bit of good news, and that thing's going to fly. So yeah, I'm not completely bearish here. Like, do I see in the future things that are bad? Debt is super high. Our government's making unwise decisions. We're abusing the power of being the world reserve currency. We have players on the other side of the board game that are really capable, that are putting the screws to us. Yeah, I see all that. Is that something that is preventable? You know, it depends. It's kind of like it's that momentum, right? What game was that? Oilers versus Bills. Man, they took my heart out. Oilers are winning. They're up big. The Bills are losing. They had all the momentum. And I forget exactly what play, but there's just like one play. It just turned everything. And then Frank Wright could not be stopped, right? So that's how I see what's happening right now. Is like the momentum's not good for the United States. The momentum's not good for what's going on. Do I think we need to burn some other brush that's dead? Yeah, we do. And what I mean by that is are there some companies that are there that shouldn't be there because they've been given easy money? Yeah, absolutely. Now, if you look at the breadth of the markets, they're like destroyed, right? Like Nvidia, gosh, Nvidia, my favorite company, Nvidia. It's down. It's so down. Hey, I bought some more. I don't know what to tell you. Could it go down to 100? Anything's possible in this market. But if you look at the pro forma, if you look at discounted cash flow, take out, forget the technical analysis. If you look out, I mean, gosh, what a great company. Tell me where you think the world's going to be in 5 years, 10 years. Don't you think that we're going to be doing more crypto? Don't you think that we're going to do metaverse? Don't you think we need the graphics cards that Nvidia has? They have the best ones. They have competition. I get that. But you know how it goes? The big companies swallow up the small companies. If a small company has a really good idea, that founder is going to get $100 million. And guess what? He sails into the sunset. And then Nvidia captures all those cash flows for years to come. So long story short is I'm still positive. Like, yeah, things can turn and be down. And I might be foolish in saying these things. I'm going to be negative. I'm going to play the downside, but I always have that optimism for the future. So anyway, the short of it is that the Fed has failed to have interest into the bond markets, despite all the scare that they've been applying into the equities market. To me, that signals strength. I mean, call me crazy, but I think it signals strength. So anyway, this is all conjecture. The technical analysis is telling us that we're going down. So don't get me wrong with that, okay? Everything that I know about technicals, Fibonacci, volume price lines, volume profile, volume price analysis, the patterns, I mean, everything is negative, below on the 513. So we're torn here, right? We're torn. This past week, we're supposed to be a big week, and it was on the up and the down. We closed on the down. So I could be dead wrong. Maybe this week is the beginning of what we think is like the greatest downturn in the world markets we have ever seen. Maybe. But I'm going to be hopeful. I'm going to say, the powers that be know that they can't burn the people that fast, right? This is the golden egg. This lays the golden egg. So we cannot let this burn right now. So we should end up positive for the week. as crazy as that sounds. Anyway, you guys have a good night. I hope you enjoyed this. This is a lot more philosophical than actual volume price action. We have some good trades. There's AMD is going to be trading. If Nvidia fell on earnings, then I'm going to say last time, I'm going to say AMD falls on earnings no matter how good they are. What was the other one that I saw? Gosh, oh, I got a picture of it. I'm not going to go into them too much, but I'm running late here. Let's see. Devon Energy. Devon Energy. That should be nice. I'm going calls on that. It's interesting because Exxon went down on earnings, but this is a little bit different. It's Devon Energy. Diamondback Energy, I'm going calls on that. Expedia. Let's go bulls on that. Let's go calls on that. So XP. There it is. Yeah, everything the chart's telling you is that it's negative. It's the summer, guys. It's the summer. People are traveling. All the people I know, they're planning their vacations. Nothing has changed. They're still going. Okay. So Expedia, I'm going with that. Chegg, yeah, I think puts on that. Anyway, going too fast. I'm not really doing a tons of homework on these. I think that playing earnings is really tough. So if you're going to play them, it's a little bit like lottery gambling. Everybody was really down on Roku earnings. I almost went a little heavy on that. Look at that joker. It went up on Friday. It's insulting, huh? That's insulting. Crocs is coming, Shopify. I mean, all these companies, Fubo, DoorDash. It's a good week. DraftKings, Goodyear burned me last earnings. So anyway, good luck. If you need anything, come see us, Options Trading Pilot. We show you process, how to execute. I think the real way to make money when you trade is risk management, is cutting your losses, get the ego out of the way. Make sure you're putting in trades where your downside, where you're going to cut losses, which is something that's sort of an art form, but there's ways to attack it that you cut if you know when you've lost, when you've reached that point. And then like the ones you win, you get to that target line that you want. So anyway, we can teach you how to execute. We can teach you what to look at. We can teach you all these important factors for you to be free as a trader. All right. Have a great week, guys.